of examples for notified jurisdiction areas and what happens is if you have to trade within such a jurisdiction. Now, notified jurisdiction areas refer to jurisdictions that have been identified by a government or regulatory authorities as not having sufficient regulatory frameworks or tax transparency. And loosely referred to in the normal language, they would refer this to as tax havens, jurisdictions where the information exchange on tax matters is not as sophisticated or seen as adequate if you compare it to many other countries. So in India, the concept of NJA, was introduced under Section 94A of the Income Tax Act, and the central government has the authority to notify any country or territory as an NJA based upon specific criteria. And that means that this could mean that whether the jurisdiction does not have effectively exchanged information with India. So examples are, Cyprus in 2013, India declared Cyprus as an NJA because of its lack of cooperation in sharing tax-related information. However, this notification was rescinded in 2017 after Cyprus agreed to exchange information and amend its tax treaty with India. Just a good example of how one can be in situations like this. So what are the implications of trading with NJAs? So you could end up with higher tax rates, because there's higher withholding tax rates between jurisdictions because of the so-called NJA or tax haven. The non-deductibility of expenses is something that jurisdictions will also consider. Obviously, the one that I'm always very careful of is your increased scrutiny. Remember, when putting certain structures or businesses in place, always remember that you need to take into account that you could have more scrutiny and you could end up with more of the next point, which is transfer pricing regulations, which do challenge your normal way of doing business because of the NJA. You could end up also with your typical deemed residency rules that kick in because of the entity being in India, depending on, as the Indian example, and that depending on the nature of the transactions and the relationship between the parties. So always be careful of that as well. And then also very important, when you start doing certain transactions or involve certain NJAs, you could have an increased reporting requirement in terms of the NJA and the disallowance of deductions, etc., etc. And those items could make it quite difficult for one to actually consider making use of a notified jurisdiction area. So those were just a few points which I thought was worthwhile mentioning.